We've actually seen a pretty strong rise in investor activity in most markets compared to a year ago.
Governments are trying some innovative solutions to try and tackle that affordability.
Governments are responding to this, and we're seeing that also play out through the media.
The 2025 property market has seen some significant shifts in just the first 6 months. From 2 interest rate cuts and an impactful federal election to continued price rises throughout most of the country. Joining me to discuss the state of play and what the rest of 2025 could look like is property journalist Ben Dorrington and senior economist Anne Flaherty, both from REA Group. Look, let's start with one of the bigger moments of the year. Labor's resounding victory at the federal election. I mean, we're a couple of months on from that now, obviously, but I just keep hearing Albo say housing stock is causing the affordability issue. And has the election win given a boost to the housing market?
Look, I think there are some positive signs, and one of the biggest ones was a commitment by the government to develop over 100,000 new homes exclusively for first home buyers. So that's a very positive step. And I think even just that recognition that the lack of housing supply is one of the major factors that's causing the housing crisis at the moment is very important for our leaders to recognise that and then to actually think about what they can concretely do to help alleviate that is going to prevent the housing crisis from getting well out of hand.
Ben, from a news point of view then, what has been the biggest property topic of 2025?
The federal election was a big deal, but I have to say the biggest story has been all about interest rates. It's impacting pretty much everyone, and it's just something that people are watching super closely at the moment. You know, you have home buyers who are carefully watching to see if any sort of interest rate cuts will expand their borrowing capacity. You have homeowners looking if they're going to get a bit of extra cash each time the RBA gets together and makes an interest rate cut. And of course, a lot of experts around the country are talking about the potential impact that it could have on prices and whether we're going to start seeing price rises as a result of some of these interest rate cuts.
Speaking of price growth, I mean, let's do a little bit of a price check-in, because considering that prices did still continue to rise, even with high interest rates, and now they are jumping even further amid those couple of interest rate cuts. And what have prices been doing this year?
We're definitely seeing interest rates have an effect. Even if we just look at buyer demand, the week after we saw the first rate cut, we had more people visiting realestate.com.au than we'd seen in over 3 years.
Wow.
If we look at how prices are moving, they'd really slowed down over the back half of last year. But since interest rates have started to come down, we've actually seen signs that price growth is picking up again. It's not as strong as it was at the same time last year, but it's certainly looking like it's picking up from where we were at the end of last year.
All right, so let's break it down state by state. Which states are seeing the biggest jump in price?
The market that's seen the biggest growth over the past year is really Adelaide, which has seen over 11% growth. Perth is another one that was Australia's best performing capital for a long time. We have now seen price growth slow a little in Perth, and it is now behind Adelaide. Brisbane then comes in at third place, and we've seen growth above 8% there. On the other end of the spectrum is Melbourne, where if we look year on year, prices are down in Melbourne. But if we look over the last few months specifically, there seem to be some very strong signs that Melbourne's actually finally having a bit of a comeback. It's been one of the strongest performing cities recently. But if we look at a longer term, it's seen around a fifth of the level of growth that a lot of the other capitals have over the past 5 years. So it's still sitting a long way behind a lot of those other markets.
So 2025 has colloquially been dubbed the year of the cuts, which is music to many people's ears. I mean, we hope to see a few more. But Anne, what are your predictions in this space for the second half of the year?
Look, we do think we will see more interest rate cuts over the second half of the year. I think it's still a very, very strong possibility that we'll see at least another 2 cuts before the end of the year.
And what are we thinking in those cuts? Kind of 25 basis points each, maybe a double cut of 50 basis points. Feels unlikely, but I mean, I'm hopeful.
It is unlikely, but at the same time, if we look at what's happened over the past, even just 6 months of this year, it's been extraordinary. Just geopolitically, economically, there's so many uncertainties right now. And so I don't think that we can really say for certain with any great level of clarity what will happen next, whether it be tariffs, whether it be more strife in the Middle East, whether Australia's own economic growth is going to be impacted by something else we haven't thought of that could potentially lead to sharper rate cuts.
You did mention before, Anne, Help to Buy schemes and how, this year could benefit first home buyers. But the scheme is going to be broadening in December 2025, kind of into January 2026. Do you think these schemes will impact price growth?
Look, I do think that any scheme that basically pushes up demand typically results in higher property prices.
Mm-hmm.
Now, this is a very interesting situation because these are schemes that already exist, but they've been expanded so that people with a wider range of salaries, higher property values can actually take advantage of these schemes. So I think that starting at the end of this year and then early next year, we're probably going to see a bit of a jump in first home buyer demand.
Mm-hmm.
Now, that is likely to coincide with slightly higher property prices. But at the same time, first home buyers aren't the majority of the market. They're typically around a third of buyers at most. So the impact of these schemes on property prices is going to be one to watch.
Ben, I'd love your opinion on this because you chat to an enormous amount of industry experts. What's the sentiment amongst the industry around price growth?
Yeah, chatting to agents on the ground around the country, there is a general sense of cautious optimism. And it's for different reasons in different parts of the country. Looking at cities such as Adelaide and Brisbane and Perth, the reason they're a bit cautiously optimistic is because they've had really strong growth, as we've just talked about. But things are slowing down a little bit. Mm-hmm. And what they're telling us is they're seeing, for example, maybe fewer people attending open for inspections, or maybe they have maybe one or two fewer buyers than they did a year or two ago. So they're seeing a little bit less competition in the market, but they're still pretty optimistic about the situation there. Then looking at some of the more average performing cities like Sydney, you are seeing more balanced conditions. I think they have about 2 to 3% growth. The agents on the ground there are talking about the fact that, this means that homeowners are still getting a little bit of equity each year. It also means that home buyers have a little bit of time to save up for a deposit without getting sort of outpaced by home price growth. And then finally, in Melbourne, where things have been a bit sluggish for the past year or so, we're starting to see prices are appearing to be on the move again, at least in the past few months. And that is giving agents here a sense of optimism. But of course, they're pretty cautious because it's been a pretty tough time down here in Melbourne, and they definitely don't want to get ahead of their skis.
And stock levels have been slowly getting better in the last 12 months or so after the nightmare that kind of was 2023, where there was not a lot of homes for sale. What are your predictions in this space for the rest of the year?
We did see a return of stock levels in 2024. This year, we are tracking a bit below what we were seeing at the same time last year.
Mm-hmm.
I think, though, that it's a pretty interesting situation. We know that seller confidence is pretty high in most locations, but if you're in a market where overwhelmingly people think the prices are going to continue to rise, then for those who have some flexibility around when they sell, they might be considering holding on for a bit longer. On the other hand, from a buyer's perspective, if they think prices are going to be moving upwards, maybe they want to act sooner than later. So I think it definitely depends on the market. We know, of course, we're in the winter season at the moment. Stock levels are always a little lower over winter. But I think that once we hit spring, we will possibly have had another rate cut or even 2 rate cuts happen. And that could actually really boost selling conditions.
Another trend I want to cover today is low construction. Especially in the last 2 years, we've seen a decrease in construction activity to new builds, which also then does affect that stock level. And dwelling approvals are currently sitting at a decade low. After all the government promises, are we expecting to see an uptick here? It's
challenging at the moment. We have seen the rate at which construction costs rise has stabilised, but it's stabilised at a very high level. It's still very expensive to build new. Particularly building apartments is very expensive. And so what we're seeing at the moment is the majority of development is your house and land or your premium apartments. We're not seeing too much in that affordable apartment space. Another issue, of course, is that the 1.2 million homes the government wants to build, they will just ensure that the ratio of supply and demand for population to number of homes stays constant. And that means that it's not going to really improve the current housing crisis if we achieve that. And then the situation we're in now is we'll probably get around 20% fewer than what they're hoping that will be built. And another issue, of course, is that population growth is actually continuing to exceed the government's own forecasts. So there's a lot of factors here that could lead to us not building anywhere close to enough homes.
It will be interesting to see, I guess, what happens in the latter half of this year and then beyond. But stock levels and low construction all now play into the topic I want to touch, which is affordability. So all of this stuff is making it tougher for affordability, even in spite of some of this interest rate relief. And what areas around the country have the potential to become less affordable than others?
Look, I think anywhere where you're in close to a CBD, there's not as much available land to build on. So if you are going to build, you're going to be, potentially doing a knockdown rebuild or buying existing. It's becoming increasingly difficult. We're actually seeing that the majority of growth in buyer demand and even in property prices is centred a lot on our peripheries, so in our outer suburbs, some regional areas that are well plugged into capital cities as well. These are areas that are attracting a higher proportion of buyers, particularly your younger buyer, your first home buyer, who might be in that stage of life where they're looking to upgrade or increase the amount of space to raise a family. So that's where we're seeing a lot of demand. Unfortunately, I think affordability isn't going to materially improve in a lot of our capital cities.
Ben, well, what are you seeing in the media about this and how it could affect the wider market for 2025?
Yeah, affordability is a key issue for Aussies everywhere. We saw at the recent federal election that it was a priority for voters, and we saw the major parties respond with pledging billions of dollars in new policies to help make housing more affordable in a variety of ways, whether it was investing in modular housing technology or giving money to people or helping people out through shared equity schemes. So the governments are responding to this, and we're seeing that also play out through the media. One thing that was really interesting to me lately has been watching this year's state budgets and the housing inclusions that they've had in their state budgets. They've obviously seen what's happened at the federal election and realised they need to really step up their housing spending as well. There was two things that really stood out for me out of all of the state budgets that have happened so far. The first one was in Queensland, obviously a really, really hot market where affordability is a really big issue now. It's gone from maybe one of the middle-ranked states for house prices to now one of the top. But the Queensland government just introduced a shared equity scheme where you just need a 2% home deposit in order to buy a home worth up to $1 million. So I feel like that really sort of shares where we're at, and that's for first home buyers. So it just sort of shows you like where sort of people are at when it comes to affordability, that first home buyers are looking at $1 million homes and they need as low as little as 2% to get into the market. The other thing that really stood out for me was the South Australian budget, and they introduced a scheme called the Rent to Buy scheme. And from my understanding, I think this is probably the first one in Australia. It's just a pilot program. They have about 100 homes on offer, and what will happen is they'll be rented at a discounted rate of about 75% of market rate for up to 3 years. Then the renters have the option to buy that home at a locked-in price. So I think what we're seeing now is we're just seeing policymakers trying really innovative approaches to tackle affordability head on, because the good old days of just giving out grants it hasn't worked, and they're really looking at what they can do to address affordability, and that's playing out all out in the media.
Look, there's some interesting schemes there, and especially that one in South Australia. I hadn't heard of that either. So I think governments are trying some innovative solutions to try and tackle that affordability piece. But now let's move on to the rental market. Look, and we have seen slight relief in this space this year with slightly more choice for renters and prices probably not growing at the speed they were maybe 12 months ago, 24 months ago. So what are your predictions in the rental space for the rest of 2025?
We saw absolutely record growth in rents a couple of years ago, and certainly we don't think that we're going to repeat that level of growth. compared to 5 years ago, the average Aussie renter is paying around $11,000 more per year. In a
Wow.
market like Perth, it's around $16,500 extra compared to 5 years ago. We have seen rent growth slow over the last 12 months. Having said that, vacancy rates are still sitting very low around the country. They're still at sub 2% levels in most markets. And with population growth still so strong, we know that when people first move to Australia, they're much more likely to be renters than owner-occupiers for at least the first 5 to 10 years. So what that means is we're still continuing to see pressure. It's kind of astonishing when you look at where rents are sitting. As a Melburnian, a lot of my friends who talk about the fact that rents couldn't possibly move higher than where they are at the moment because people couldn't afford to pay them. But when you look around the country, Melbourne is now the second cheapest capital city to rent in. So there's no question that rents can move higher when you do see very, very high levels of demand and not enough supply. One piece of good news, though, for people who are renting and are not looking to buy at the moment is that there has been a bit of an increase in investor activity. Well, not just a bit. We've actually seen a pretty strong rise in investor activity in most markets compared to a year ago. Now, if a home is purchased by an investor, that normally is rented out to people. So that's great news. On the flip side of that, though, first home buyers often compete with investors for those homes. So for those renters who are looking to buy their first property, it can be more challenging at the moment because they're competing with more investors.
Ben, is there anything we should be keeping across in this space from a news point of view? Has there been any policy updates or any changes in this space?
Yeah, I think the big change that we're seeing is that we will start to see more rentals, and we are seeing more rentals coming to market, but not in the way that I think most people would expect. And I think what's interesting is, we're starting to see more and more social housing being built, or at least getting approved. And that's coming through the federal government's Housing Australia Future Fund. They're dishing out millions and hundreds of millions of dollars into getting projects off the ground to help more social and affordable housing to be built. And so that's kind of taking pressure off the lower end of the private rental market. And then the other interesting factor that's happening is the build-to-rent market. They've been sort of building and completing, in recent years, like thousands of apartments at a time, or at least per year, sorry, and that's starting to take pressure off the higher end of the private rental market. And then you combine that with sort of the general building boom that Anne's talked about today. Some of that might be absorbed into the private rental market, but also it just takes the pressure off the housing market in general. And I think what all of this means is that hopefully there's going to be a bit of a relief for renters coming soon. I don't know how long, because obviously construction takes quite a while to get done, but I think there's a bit of hope on the way, especially with that social housing element and that build-to-rent element helping out at different ends of the private rental market. This has kind of been a few years in the making, but the state and territory governments have been working on harmonising rental rules right across the country. This started back in 2023 when National Cabinet agreed to sort of harmonise at least some standard rules, so that if you move states, that you could come to expect a standard level of sort of rental rules. Some of these rules include strengthening eviction rules for renters, limiting rent increases to once a year, and introducing minimum rental standards. And that comes around, I think, things like heating and cooling, for example. Those are well and truly underway, and I think most states have actually implemented most of these changes. I think the next big step, though, is helping renters understand that they have new rights, and helping landlords also understand that they need to meet these obligations as well for renters.
I completely agree with that. So it sounds like there's actually heaps happening in the rental space, and we're probably likely to see all of this play out in the months and years to come. But I want to elaborate on investors, but it's another topic I want to hit this episode because in 2023, we did see investors leave the market, quite rapidly. But in 2024, we saw a whole new wave of investors coming back into the market. And can you just elaborate a bit more on what has 2025 done in terms of property investment? And what do you think things could look like for the rest of this year, given that potentially cuts in rates is making things more lucrative, but also more appealing to this buyer group?
I think investor demand is going to remain really strong throughout this year.
Yeah.
Lower interest rates, of course, are a factor there. But I think that depending on the goals of an investor, if you're looking for capital growth, lower interest rates, all else equal, tend to push property prices higher. An undersupply of homes and a growing population means that a shortfall in housing stock is likely to push prices higher. So I think that there's a strong argument to suggest that if you are hunting capital growth, there's absolutely scope for that in a lot of markets around the country. Rents are also still sitting pretty high, and vacancy rates, as I mentioned, are still quite low. So the actual risk for investors at the moment of purchasing a property and it sitting vacant for a long time, that's quite low.
Mm-hmm.
So I think there's really a lot of upside for investing at the moment. It isn't the same story in every market. You know, we've seen in Melbourne, for example, there are a lot of investors fleeing the market. We were seeing more investors actually selling than buying for well over 5 years now in Melbourne because of the higher taxes. But then if we look at a market like Perth, we actually saw at one point there was a nearly 50% year-on-year rise in investor loans. And, you know, in markets where we're seeing higher investment activity, as I mentioned earlier, there are actually pockets around the country where we're seeing rents come down, and they tend to be in those areas where there's been very concentrated high levels of increased investor activity.
Mm-hmm.
So I think more of the same is what I would expect over the second half of the year. Particularly, I think one major thing that investors might be thinking of is if we're going to have a wave of first home buyer demand come in early next year with these expanded initiatives, some investors might now see the present as a good time to get in before that wave arrives.
Thanks so much. It's been an insightful episode, and I always appreciate your time.
Thank you.
Thank you.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general advice and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.